All right. Good afternoon, everybody. Thank you for
Steven.
being here on Saturday with the White House Quant. Matt, how are you?
Good. Sorry, I didn't realize I didn't set up my camera. Should be set up now. There we go. Let me zip.
There we go.
Let me dress myself. Jesus.
There you go.
Giving people a free show. I don't want.
How you feeling with the shades? Are the shades doing good?
Shades are doing good, Steve. Every day I just wake up and aspire to be more like you. And so I realize that I just don't have that aura around me when I come on stream like you do. And so I have to wear a multicolored shirt and red lens sunglasses, or not sunglasses. Maybe they're orange. I don't remember. But all in the pursuit of trying to be more like you.
You know, I'm in the pursuit of trying to figure out my life. All I have to say is the group text on WhatsApp is so fire right now. I think I sent 10 different food porn reels. And if I was to log into Instagram and show you what's in my algorithm, 90% of it is food.
Okay, I thought that was going somewhere else, so I'm glad it was food.
It is you're on the group chat.
Oh yeah. But I don't keep up with everything. I've been living the dream. Today at the cigar shop, had nice 2 cigars.
Oh, whoa! You went to the cigar shop?
I told you that this morning when you called me.
I thought you were maybe just trying to get me excited. You actually went. I like it.
I went. I had 2 cigars. Oh my God, this, Steven.
Are we sharing the screen? What would you just do?
No. If people want to see it,
I want to see it. I want to see it.
If people want to see it, Steve. If
I
people want to see it,
share it. I want to see it.
No.
That's not okay. That's not fair.
Well, I have to do something to get my viewers up because you have 1 billion viewers and I have 5.
Spencer, I did not send 50. And Dookie Pie, thank you very much. Really appreciate it.
And so in order to get any sort of love, I need people to go to my channel and look at what the thumbnail looks like, Steve.
I think Dookie Pie is right.
What is Dookie Pie right about?
That you're giving off some Hunter S. Thompson vibes.
Who's that?
You did not just say who's Hunter S. Thompson. Yeah, you really don't know who Hunter S. Thompson is?
Let me think. Am I being thick? Hold on.
I think you're being a little ridiculous, sir.
Yeah, I don't know.
The journalist that documented stuff with the Hells Angels, Fear and Loathing in Las Vegas. Anyway, you can look him up. It's pretty ridiculous.
Like Johnny Depp and Fear and Loathing?
Yeah.
I'm confused. Oh, okay. Yeah. Got it. Now I understand.
Dookie Pie, I don't know what we're going to do with him. Fear and Loathing, such a great freaking movie.
Oh, I have seen that. Yeah, I just didn't remember the name.
You didn't put 2 and 2 together?
Yeah, I was like, is this a real journalist that you're talking about? And I was like, yeah.
All right. Well,
no point.
Fear and Loathing is a great movie. Michelle, thank you very much for being here. June, what's going on? Spencer, what's going on? Dookie Pie, what's going on? And I will not stop sending food reels, by the way, everybody.
Steven, no point mentioning these bats. I thought the poor bastard would see them soon enough.
Matt, if you look at some of the reels I sent, they're pretty ridiculous.
I might have to.
You may have to. All right, Matt.
I've been waiting for a man like Steve.
We got a big week this week.
Come into my DMs. Oh,
we have a big week this week, and the people want to know how you and I feel about NVIDIA, Snowflake, Salesforce, and what tech is going to do this week. So let's kick it off with first saying thank you to Dookie Pie for gifting 10 people memberships. Thank you, Dookie Pie.
Thank you, Dookie Pie.
Truly amazing.
Love
so, Matt, let's start with you. And Melanie is seconding me.
Melanie Struck. Melanie Struck is a good role model to society.
You know, some say that she's a good role model to society.
Some say that I wish she spent more time with us when we were in New York, but
You
I
know
get it.
what? I just realized we can't get into anything yet.
You're right.
We
glad
we
you call
need
yourself,
to
Steve.
make a little disclaimer here that we are not financial advisors. We have no freaking idea what we're talking about. Take everything we say with a grain of salt. We're just two guys that do a bunch of research and do your own due diligence. With that being said, let's start with you, Matt. How are you feeling about this week? Do you think NVIDIA is going to blow the doors off earnings? Do you think that they're going to be able to pump some life into the tech trade? And do you think Benioff is going to be able to come out and calm the market's fears about SaaS? Where are you going with this?
Well, I don't know if Benioff can do it alone, but he needs a little bit of aura help himself. We maybe take a line out of my playbook or maybe Dan Ives' playbook. But I think overall, I think SaaS is not cooked. I think SaaS will be fine. I think everything will turn around in time. I get it. I think people are just fearful of the uncertainty that's going on. And with that, they immediately want to drive out anything that might kind of be at risk first. I mean, do I think that SaaS will eventually get hit in a more detrimental way? Yes, but I don't think that it's going to get hit overnight tomorrow with what we're kind of seeing. Although I could be naive just based off the fact that I don't know enough about the space. But anyway, there's that piece. But I'm just continue to be flabbergasted by the amount of work and output that these GPUs and compute power is doing across the nation. Even Meta is getting involved in some of this agentic AI sort of stuff. I was using it a little bit last night. This is pretty impressive, the things that you're able to create. So if anybody else is doing something comparable to me, and I know Tevis is getting involved, and many others are also asking themselves, how can I get agents to help me with my day-to-day? I just think that there's going to be a large increase in amount of compute that's necessary. And with that, I think that just like what we had with the internet, you're going to have a lot of people and a lot of capital going towards this. And right now, I mean, they're not monetizing it, right? I mean, to get some of these complex agentic sort of work done, you need to pay money, and sign up. And so they're not doing it for free. So I think that as things continue to increase and people continue to do more work, and there's inefficiencies with some of this stuff as well, right? Like we've heard people just spending thousands upon thousands of dollars just based off mistakes, right? And compute power that they didn't even realize that they were utilizing, right? Spurious sort of data points that lead to, continuous compute that they didn't necessarily anticipate, stuff like that. So I think in the short term, I think that there's going to be a need for a lot of additional infrastructure in which NVIDIA is going to be a key player in that. So I think NVIDIA will show up really well. What I don't know and what I can't forecast is how prosperous of a quarter the analysts on Wall Street are predicting for them. So I just think that it's going to be a continued great quarter comparatively to last quarter. I generally don't care about what the analysts say. What I will say, Steve, is, and I know that I've been kind of, I don't want to say bearish, but a contrarian to how I think that this will be a cyclical piece. I will say I'm seeing more and more of what you've said for a while. So I'm backing up, what I've said in the past, which is sometime in 2026, we'll see some sort of pullback with respect to capex, maybe. I think you're right. I don't think that we've seen a nearing of the peak of capex expenditures. Although I'm cautiously optimistic that with what we're seeing in terms of the market overall's reaction, I think there might be a potential that people lighten up in the second half of this year, considering we haven't even gone through the first quarter of earnings yet. It's only been fourth quarter for a lot of these companies. So I think in 2 to 3 quarters time, maybe the verdict is still out. Maybe people pull back a little bit on their total capex. One, because of the fact that we're starting to see pushback at the township level for some of these data centers that are trying to be built. And then two, the market is not receiving it well, right? And I get where people are coming from. Like if you're not first, you're last. So I get it in that respect. But overall, I think in the short term, regardless of whether or not you're worried about township restrictions or people, NVIDIA is going to win because more and more people are going to continue to use it. So anyway.
So what do you think happens this week, Matt?
I think Rocket Lab's going to the moon. I don't care about Wednesday, only Thursday.
You don't care about Wednesday, only Thursday.
Are you streaming on Wednesday, Steve?
You know what? I'll be streaming on Tuesday for Zeta. I will be covering Zeta on Tuesday because I'm part of the Zeta Army. This is a big week.
Think your brother, man?
You know, only on days that end in Y. So, this is one of those days, Matt. I didn't even realize you're wearing a Rocket Lab hat. Look at you.
Steven, I come prepared.
You do come prepared. You support your companies.
Every stream is a battle.
We appreciate it. We appreciate it. So here's where I see this going. This is going to be an interesting week. And
it will be fun.
And I am hoping Jensen comes out and backs up everything that we saw from the big hyperscalers. I think that we're going to see him say that he expects these companies to spend more in capex in 27 than 26. I think the tech trade is on his shoulders at the moment. And I think he knows it. We've seen this happen before where things were just waiting. When you look at November, this happened. What are you drinking? Cracking a beer? What are you doing?
Little Dr. Pepper, zero sugar.
Ooh, little Dr. Pepper.
Little established 1885. I didn't mean to distract you. Continue.
Well, I figured you may be cracking a cherry Coke and getting your Buffett on.
That's too much aura, Steve.
I mean, I may start having a cherry Coke in the background just because of Buffett. We'll see.
He's the man.
We'll say. Anyway.
Well, DPZ, Steven?
What, Domino's?
Wise, but no, Dr. Pepper Zero.
Oh. What's Domino's' ticker?
I think it's DPZ. I think you're right.
Right? Isn't it?
Yeah.
Anyway. I think that Jensen knows what he has to do. I think the numbers are going to be excellent. I don't see a world where they aren't beating expectations this quarter and having strong guidance. I'm hoping that's going to be enough to let the insanity around the tech trade stop. You know, we got into a discussion last night about how maybe Apple's taking the correct approach when it comes to not allocating toward capex. Not you came in after that, but
yeah, I was about to say, I was like, I don't remember you guys talking about
you, Tevis, Roy, and myself. And I want to build something out that disproves that. It's just
wait, they're saying that it's wise that Apple's holding back?
I think Apple makes enough money that they don't have to play this game. And they can just piggyback off of whatever they feel is going to work in their ecosystem the best. They don't need to spend the money on CapEx because they don't have a enterprise level cloud business. And they never will. They have a storage business that they're probably not even running themselves. That they're probably just taking a cut of what they bring in. And it's probably running on AWS, Google Cloud, or Azure. So they don't have an enterprise level business, but the reality of it is Apple's profitability is not growing the way that these other companies are. So I do think that we are in a situation where the CapEx spend, we can see that it is absolutely warranted. And when you bring, not you, but just in general, when people bring up Apple, it's the worst one to bring up because when I'm just going to do two of them so I don't waste a lot of time. So when I look at Microsoft versus Apple, the growth in EBITDA is so clear about what happens when you invest in yourself. So let's bring this up real quick. We know one of these companies allocates a ton of capital to buybacks. We know one of these companies allocates the majority of the capital to capex. Apple's capex over the past 4 years, I'm sorry, their EBITDA over the past 4 years has only grown by 17%, whereas Microsoft's has grown by 79%. That's not a fluke. That's because Microsoft generates so much from their assets that they've built out. When I look at the cash flow statement, in the trailing 12 months, Microsoft has spent $83 billion in capex. Apple has spent 12. And Apple's been around that level, 10 to 12, 10 to 13 for years. Microsoft gradually increases. And we see what happens. Microsoft flipped them on EBITDA in last year, and this year they're doing 23 billion more. I mean, the growth rates are the growth rates. That's the beautiful thing about math. Math does not lie. And do I think Apple's wrong for not allocating to capex like these other companies? No, because they haven't had a need to. And maybe they are going to do better saying, you know what, we're going to take 10 billion or 15 billion a year and license out whatever we need to do from one of these companies, because it'll be a lot cheaper in the long run than building it out ourselves. And because we know that our install base of 2 billion units, people aren't getting rid of iPhones, that we're in a position to do that. Let Alphabet, let Microsoft deploy the capital, and instead of spending, call it $1 trillion when it's all said and done, or $750 billion when it's all said and done to capex, we can just spend 10 or 20 billion a year. So I think Apple's doing a smart move, but that's only half of the story. Question is, where's their big growth and profitability going to come? And I'm not seeing that. Whereas these other companies that continuously deploy, we're seeing the growth. So I think Jensen's going to come out and I think he's going to say that he sees a lot more investment. We're still in the early stages. And I'm hoping that's enough to get the market to realize that this capex spend is not nearly as scary as what some of the people in the media are making it out to seem. I'm not worried about Microsoft coming over the top this year. Even if Microsoft goes to 200 billion in capex, why would we care? This is a company that just grew their EBITDA to 175 billion. Do we think that they're not going to continue to grow? There's nothing in the numbers that shows that. Every year they grow more.
Well, just like the math, your hips also don't lie, Steve. But
I don't dance, so I don't know what to say.
But some also say that it's on tonight. And but what we're talking about is, I think it's somewhere in the middle. You know, in all seriousness, I think while I respect what Amazon is doing, while I respect Microsoft, I still think that there's a lot of risk to the potential shareholder. And maybe it's a conservative in me. I think I would rather, I don't want to be exactly where Apple is sitting. Allocating a small margin of my profitability of close to maybe 10 or less percent in terms of capex. But I also don't want to be where Microsoft or Amazon is, where they're actually having to go into debt to be able to fund things. I think there's a sweet middle ground where you can play both sides to this. But at the same time, I guess it really just depends on what works for each individual. I think Microsoft is doing what I believe they think is right for their customers and shareholders. And I think Apple's doing what I think is right. But I think in reality, I would love to see Apple play some sort of game, at least try to do something. And I think the thing that scares me, while I recognize that they've been sitting on the laurels of the benefit of what Jobs has done, there has been some strategic moves about increasing efficiencies and doing a really good job with creating a very sticky ecosystem. I'm 100% with you. They need some sort of innovation to drag them in to the 2030s that at the moment I don't see it. So I align with you to an extent. Like, I think that Apple has the ability to sit on their laurels a little bit while they let everybody else figure it out and then come from behind. But at the same time, I think they need to take on some risk, and I think that they're playing it too safe. Versus Microsoft maybe is being a little bit too much risk on. And I'm not saying it's not going to work out for them. I think it's still going to generate lots of potential, but I think you're also going to see margins potentially shrink as I anticipate the cost of these things is going to go up with regulatory concerns, with power, with people just wanting to get their hands in here. I mean, just like what we've seen with memory, right? With the SanDisk and all those things. Like when you have hundreds of billions of dollars being put into one particular location, there's just going to be natural inflation. We saw the same with offshore wind, right? People wouldn't spend more than $1 million on some of these offshore wind leases to them going to be worth billions of dollars. So it's the same sort of thought, right? People with big tracts of land near infrastructure and cooling potential, eventually you're going to get the fact that, hey, we have a huge commodity that we've always been holding on to, and Microsoft's coming or Amazon's coming. We can sell it for way more than they want, or than we want, because they need it more than we do, right? They promised $300 billion worth of capex over the next 2 years, depending on what company you're looking at. And so anyway, I think that the answer is somewhere in the middle. Am I happy that Amazon's going into debt? Not really. I mean, the one thing is if they went into debt just because it's cheap money and they'd rather just get that money and instead of onshoring it and placing it elsewhere and all the tax implications associated with that, they just get it because it helps fund a bridge loan. Then I'm kind of okay with that. But the thing that I'm fearful of is that margins will continue to shrink. I think everyone right now is enjoying a large amount of margin, and what happens in the long term as things kind of contract, and that's where I'm at. So I think the answer is somewhere in the middle.
So I'm going to touch on the Amazon piece. It's a company that I believe both of us are bullish on, and that looks freaking delicious. And I wish I had one. So I will just keep drinking my coffee. But
Join the flavor train, Steve. Join the flavor train.
I'm enjoying my coffee. I'm a big coffee geek, and I should have had a cookie, but I want to go to the gym in a little bit. Anyway, I'm okay with Amazon spending the 200 billion, and here's why. One,
but consistently though, or just for 2026? That's the problem that I see.
I'm fine with them spending 250 next year. I'm playing the long game. So if they spend 200 this year, 250 next year, and 275 the following year, and then take it back down to 200 to 150 as a maintenance mode, I'm fine with that. Because 5 to 10 years out, they'll generate so much free cash flow that it's not going to matter. I'm not looking at this from oh my God, they're negative free cash flow this year. Oh my God, they're going to be negative free cash flow next year. I don't care.
Which in a way that works for me and hopefully explains what is exactly what Exxon did when they found Guyana.
So
right? They went free cash flow negative to be able to get the boats up and running, and now they're printing money. So I get what
and the big thing with Amazon is I think about it like this. On the retail side, they have two main competitors, Walmart and Costco. Neither of them, and you can throw Target in there. Those three cannot hold a candle to Amazon's delivery. They don't have the logistical network, and Amazon didn't build that logistical network without allocating to their capex. Their capex spend is not just data centers. The big thing is the more that Amazon improves their deliveries, the more that they get better compared to the competition. And if the competition wants to compete, they are now forced to do something very uncomfortable, and that is spend additional capital, which will erode their margins. So this isn't just a story about Amazon spending. It's about what they're making their competitors do. And their competitors are going to be forced to erode their margins if they want to still compete. When you look at, and I'm going to bring up the stats, some of the stats on Amazon's conference call were absolutely insane. So I cited them in my article. So just give me one moment. I know I put them in here. Just give me a sec. Okay. In the US, Amazon delivered nearly 70% more items same day than in 2024, while nearly 100 million customers use same day delivery. 100 million customers. That's crazy. When I see that, and then I see that their AI shopping assistant Rufus was used by over 300 million customers in 2025 and contributed roughly 12 billion in incremental annualized sales. I mean, this is a very big flywheel. And they did talk about what they're looking to do over the next several quarters. I think that the gap is going to widen between them and their competitors from a shipping standpoint, which is going to likely make people utilize Amazon more. And then as far as the technology side, what's the answer? Well, Amazon has to spend, because if they don't spend, we know they're capacity constrained. We know that they have over 200 billion in RPO. And if they don't generate more capacity, those customers are just going to go to their competitors. So they don't have a choice. And on one side of the business, they're fortifying themselves against competitors that are so far behind, I don't even know that they can catch up. And then on the cloud side, I think that they're going to feed their largest profitable business line. Amazon may go sideways for the next couple of years. That's fine. If you're a long-term investor, you shouldn't care, because Amazon has the potential to be doing hundreds, not tens, but hundreds of billions in free cash flow in the next 5 to 10 years. You're muted.
I don't hate it. No, and so I don't disagree with you, Steve. I think you are right. But the contrarian in me and the person that wants to be a little bit, so I think that there's bookends, right? There's the oracles of the world, which have gotten themselves ridden with that. Whether or not they're going to be able, I think they'll be able to pull themselves out. But I think that they were a little.
I just saw your freaking thumbnail. You're so ridiculous. I don't know how you come up with this shit. It is hilarious.
Show the people, Steve.
I gotta find it again because I just hold on. It's so ridiculous. Right. And Dookie Pie, I will be putting a poll up in a moment. Just give me a moment. Look at this. Stonks with the milk oracle. I don't even know what to say anymore.
See, that's even 91 watching. All because of you.
I don't even know what to say anymore, Matt. You do come up with the greatest freaking thumbnail. So go on. Sorry for cutting you off.
There's bookends, right? So I don't know which one you want to claim is the most extreme. I would say it's probably Oracle. I think that they're way overspending, but they're trying to keep up, right? I think that they realize, I don't want to make this like a geopolitical comparison, but I think that they're realizing that if they don't compete in this race, and they're adding that risk onto their profile, that they'll be left behind and they'll never be able to compete with the Mag 7. So I think that Oracle's in a situation where they're trying to fight for themselves to be able to compete with those guys. And I think that they might eventually, capture a lot of market share from a lot of other companies that are lagging behind in capex spending. But at the same time, it's just like, at what point do you stop, right? I mean, I get it. And I think about this for oil companies as well, right? At what point is capex too much, right? You need to find that balance point. I think that there's obviously a long wavelength from where Amazon is today with how much EBITDA they're generating and how much cash they're generating for them to go into a lot of debt and still be able to pay it off over time. But I'm assuming Verizon, AT&T, those guys also thought the same in the early 2000s when they had to move from telephone lines to fiber optics or to Wi-Fi or to now 5G or now to 6G. Like, they continue to have to reinvest themselves to be able to balance this act, and they never fully get on top of the debt. So at what point, do you pull back? I'm not saying that Amazon is going to be stupid by going into free cash flow. I'm just saying it's something that you need to watch. Free cash flow negative. It's something you need to watch because eventually some of these companies, i.e. Oracle, are going to end up like the Verizons of the world, where they might not necessarily be able to come out on the other side as a growth company like everyone thinks, and they're stuck because of how much debt they have on their balance sheet, and they're kind of in this, I don't want to say downward spiral because they're still extremely profitable company, both Verizon and Oracle, I mean, but they're going to be stuck in this debt cycle where they have this large tranche of debt that they had to kind of pay off, and now they can't go any further into debt to be able to keep up with everyone else. So that's all I'm cautious about. I'm not saying that that's going to happen for every one of these companies, but my hope is I see some companies that go this route and they don't come out on the other side, and I see other companies that do what Apple is doing. They don't come out on the other side in the best way. They end up being lackluster, and I'm a big proponent of reinvesting in your business, not necessarily rewarding it all to your shareholders, because oftentimes the shareholders don't align appropriately with what you're solving in the world's problems, and that on its own is a detrimental problem for some of these companies, and they end up lacking innovation, etc. But I think there's a middle ground, and maybe Amazon is that middle ground. Maybe I'm not looking as much into the math as like you are, but to me, I would much prefer maybe 75% of the capex being spent, and I don't know, because I'm still uncertain as to how profitable these ventures will be. I've seen them be extremely profitable, but I don't know. The competition has changed with a lot of this stuff.
Competition on what side? I mean, there's only 4 real players in the cloud space, and one of them's not even a real player.
Well, I think a lot of it was like storage, and now it's getting into like hypercompute. And to me, that is where, did I just have a package delivered? Okay. To me, that is where I'm a little bit.
From Amazon? Just saying.
What is this?
I mean,
so I don't know. I'm talking in circles, but my hope is that there's a balance and that Amazon's able to thread that needle. I'm cautiously optimistic that they have the leadership capabilities to do so. I just don't want them to end up like an Oracle, who I think is in a completely different situation than Amazon. But yes.
I am very worried about Oracle now. They're reporting on March 10th. And when I think about what they're doing, it scares the hell out of me because they are legitimately going so far into debt because they believe this is the future of their business. Some would say Oracle is one of the greatest companies ever made. I would wait. How am I one of the lost Baldwin brothers?
They got a point, Steve.
Oh my God. Anyway, Oracle is likely considered one of the greatest American companies ever made. It's one of the largest. Been around for decades. Now, do I agree with how far in debt they've gone? No. But if we're looking from a long-term perspective, 5 or 10 years out, and they're saying, listen, we built this company. We know this company better than you, Steve, and this is what we need to do. And we are confident in the backlog of demand that we have and that we've contracted. And it's going to take 3 years to build everything out. And we can afford to have the share price suffer in the interim. We can afford to pay the interest expenses. And then in years 4, 5, and 6, and 7, and 8, after the 3 years of build out, we're going to really monetize these assets, and our balance sheet is going to look drastically different than it does now. I think a lot of people would be okay with that from a long-term perspective. From a short-term perspective, the stock looks horrible. It's $148 at the same time. Free cash flow and earnings are two completely separate things. This thing is trading at 20 times earnings. So if you think about, okay, the metrics that traditional companies are judged on, Oracle is actually looking very inexpensive with a tremendous amount of growth. And that gives me hope that this whole AI infrastructure build out is going to be worth it, because why would a company like Oracle do this? Why would they do this? And 31 analysts are saying that in their 2028 fiscal year, their EPS is going to grow by 35.5%. And then 9 analysts are saying almost 50% the following year. That's a lot of growth. And then we look at how much revenue is going to jump. This looks like NVIDIA almost. So they're about to report Q3, and then they'll report Q4 when everybody else is reporting Q1, because they're not on a calendar year. So you look at the next 3 fiscal years, 29% revenue growth, 47.5%, and then 43.5%. They're going to go from generating 67 billion to 183 billion. That's more than 100% jump over the next 3 fiscal years. So the question is, one, do we believe the analyst community to track this? And if we do, is this not worth the incredible investments that they're making? I mean, I don't like going out too far, but even if we go out one more year, since you got 7 analysts, 225 billion after 4 years, that's a ridiculous increase in revenue. So if this comes true, Oracle's probably right. We got 78% saying Amazon should be spending this much on capex, 22% saying no.
Well, I mean, if you think about it, I think it's me being a little scaredy cat, just being, up front. And I had the same argument last night in your members only. So if you're not a member of Steve's channel, be sure to do that so you could watch it. Not sure if you have it up yet, Steve, or if it was a live stream though, right?
We do it live, yeah.
Yeah, and we do it live. So yeah, if you sign up to be a member, you'll be able to get Steve's catalog of members only videos, but that he does on Friday after what is it now? The stock market.
I call it stock market unfiltered.
Unfiltered, that's what it is. I like it. And what I basically stated was I was like, it might not be optimal to buy right now, but I know I have the capital, so I might as well. And I know that in 10 years time, I wish I owned more of the market share of whatever company it is, right? Amazon, Google, Palantir, Rocket Lab. So it might not be the optimal, right? But to me, what's the difference between making I'll just throw out a number, 100% or 110% return? To me, that's the same number. And one I can guarantee because I bought the shares. The other one I can't because I haven't gotten to the right share price, right? So to me, I'm with you. It's like almost like maybe it's the most optimal, maybe it's not. That's the wrong term. Maybe it's not the perfect amount of capex. Maybe it's not the perfect returns, but it's getting you a larger market share that you wish you'll have in the future. So might as well just spend it because you have the capability to do so. And you're betting on yourself. And so that's kind of the way I look at investing as well. So maybe I should stop being a little scaredy cat. And anyway.
June, are you living under a rock? I think we cite my Seeking Alpha articles at least once or twice a week. I mean, Matt, do we I'm not crazy, right? We talk about Seeking Alpha a lot, right?
I don't know if she's referring to, I think there's a gentleman in the chat who's like trying to convince other people to watch other channels.
Oh, God. I'm only seeing certain things in the chat.
I think that's what June might be referring to.
Gotcha. So I was going to say, June, pretty sure she knows I write for Seeking Alpha.
The J-Bug is aware.
Yeah, I was going to say, like, very confused. I am very confused right now. Very confused.
I think there's just a gentleman.
Oh, okay. Thank you, June. You scared me for a second.
Okay. I wasn't sure. I can't keep up because
Gotcha.
there's 2 chats.
Yeah, I can't keep up with everything in the chat.
So yeah, I wasn't sure if that's what she was responding to. Like Steve also has investing prowess because he's the world's best seeking alpha writer.
I wouldn't say that.
Well, Steve, let me ask. Okay, now that we brought it up, and June politely let everyone know that you're one of the world's best seeking alpha writers. Of the people that are ahead of you, how many of them are full time?
What do you mean ahead of me?
Steve's like, I don't know. I'm looking up, and all I see is blue skies and clouds.
What do you mean ahead of me? I have no idea what you're talking about.
I mean, you're number 11, right?
I don't know what I am. I haven't looked in a little bit.
I think we should look, Steve. Should we look?
I mean, at some point, I'm going to be like number 1,000.
You say that, but you're like, oh, I'm gonna fall behind. Blah, blah,
I am going to
blah.
fall. This is not normal. Okay, I think everybody's making this out to seem normal because it's been like this for a long time. At some point, this is going to change. Like I could be 500 right now. I have no idea. I could be 1,000 right now.
Well, if you drop to 500,
and I'm number 12.
See,
it hasn't changed. At some point, this is going to change. I know I keep sounding like Zuckerberg like this, but at some point, this is going to change.
Some people say you're going through changes, Steve.
I mean,
Steve's going through changes.
This also doesn't mean that I know what the hell I'm talking about.
I don't know. Apparently, 79% of the time you do.
You know? But anyway, I don't know who's ahead of me. I have no idea. I don't care. It doesn't concern me. I write about what I am
What's
interested
Rita
in. What?
What's Rita at for tip ranks?
Oh, I have no idea. He does do some really good freaking articles.
Dookie Pie said she's ahead of you.
428.
Oh, see, Steve, you're even ahead of Rita.
Yeah, but he focuses on something completely different. That's much harder.
He does.
It's not fair. So he's not writing. And granted, I write about a lot of different things. So does he. He's written about 502 things. So him and I write about a lot of things, but he focuses on high yields. Okay. You know what, Spencer? You're correct. I will send some food reels in a little bit. Dookie Pie's ahead of me.
I heard she's number 1.
I mean, I wouldn't be surprised. Dookie Pie calls some freaking crazy freaking stocks out of the blue. I would not be surprised. I want to know where she gets her intel from.
She gets it out of some people.
I mean, you know, I want in. I want to know.
Do you really want to know that, Steve?
I want to know where she gets her intel from because obviously she's making money.
Everyone's making money but me, Steve.
I mean, some would say. Some would say.
We're in trouble.
What'd you do?
Being slacker. That's what I am.
All right. Well, I've been starting to look at Oracle. I'm going to pay attention this quarter and dissect their earnings. I do believe that Oracle may be a play if you have 5 years, maybe longer. I don't think it's going to do well this year. I think people are really scared, and I think that Oracle is actually going to increase their capex also. But I think that they have the most to gain because they may be able to close the gap a lot over the next several years.
So what's Apple's growth look like? Because that was like a 300% growth in Oracle's, revenue. Obviously, I think Apple's going to struggle.
Apple does not have much.
In terms of growth, right? Obviously, they're doing a tremendous amount of business. I'm not saying that they're not, but
I mean, the EPS is really because buybacks are huge. That's a part of this. But you look at revenue, I mean, this year is double digits, but 42 analysts have them at mid-single digits next year and mid-single digits the following year. I mean, this just goes back to you can't innovate without spending money.
I mean, Amazon shaved an entire year off to get to $1 trillion revenue run rate.
Yeah.
They were
And that's
forecast to be in
truly,
2029, and
now
now
it's
it's
28.
2028. Can you believe that?
Yeah, and it's truly because of them investing in themselves. And I think that you're right that there's a fine line between the two. I just don't know where the hell that number is.
Neither do I. And
And
that's what's scary to me. I mean, that's
listen, I gotta trust that they know better than me. And
yeah.
I gotta trust that they're gonna be able to do what they say. I'm not scared about big tech by any means. I mean, if we look at Microsoft, Microsoft is one of the most undervalued companies right now, in my opinion.
It's still below 400.
Yeah. I mean, look at this type of growth, Matt. This is huge EPS growth. They're trading at 17 and a half times 2028. And then you look at revenue, there's no single digits in sight.
It's insane.
So,
What did Microsoft say their capex is going up to?
I have it somewhere. Hold on. I have too many spreadsheets, is what I have.
Steve, you're a good man.
I have way too many spreadsheets.
Steven. Oh, Steven. The problem with ET, though, is that they get capital through dilution to an extent.
They do.
And that's like a debt machine to an extent. That's the same thing with real estate investment trusts. So they'll be able to grow their footprint pretty substantially, but unfortunately, just based off you're getting diluted at the same time. Which is why I have a love and hate relationship for REITs and partnerships.
Nobody wanted to listen to me on Realty Income. Realty Income's doing pretty damn good.
Is it above 70?
66, 67.
Steven.
Where the hell is this damn spreadsheet?
I used to have 1,000 shares of Realty Income.
Yeah, but now you have a lot more than that at Rocket Lab, and you're doing pretty well.
Oh, the reason why I bought Realty Income was I was like, well, so we're going to have 50 grand or whatever, 60 grand in a house. I was like, I might as well be getting whatever it was, 200 or 300 bucks a month in dividends or whatever it was. I think it was like 200 to 250. So that's my cash flow. It'll grow, etc. And then I think I just started getting into physical real estate. So I was like, well, why do I need both? So.
Yeah, I get that. I totally get that.
That and the some of these triple net leases scare me, Steve. Like Walgreens and CVS's. I think that the model, the business model for those sorts of stores are changing.
Yeah, I don't think you're wrong on that.
But the direct, and granted, it's not all their business, but I think it'll have a drag. And then, unless they can sell those for good cap rates, then it might be tough.
I'm starting to get annoyed because I can't freaking find this. And I'm really starting to get annoyed. This doesn't make any sense. That is not in my Google Drive.
Or Google Drive, Steve.
It could be.
When are you gonna hire me, Steve?
I don't have that type of money.
You don't know that.
Okay. So I just found my slides, but I don't know where the hell this is going back to. So this, I mean, Matt, this doesn't answer your question necessarily, but this is I mean, that's a lot of freaking capex growth. Question is, does it end? I don't think it's ending. I mean, 55% year over year in 24, 64.5% in 2025, and it keeps accelerating to 70.63% in 2026. I mean, you have to think that in 27, it's not going to have 0% growth. I don't think that we've topped out. I don't know. What do you think?
I don't know. 2026, 610 billion, like a triple in capex spend is insane.
And it's going to get bigger. I do think it's going to get bigger. So, Matt, should we move on? We've talked about capex, talked about NVIDIA. I don't really want to go down the SaaS rabbit hole. Why don't we talk about what we think 2026 winners are going to be? And then we'll get into the small account update.
2026 winners? I mean, sure. I mean, I don't really look for 2026, but I'll try.
The theme that's growing on me is what is not original for me. I mean, I've alluded to several things, but I have not articulated it the way that my buddy did. And my buddy who works for one of the big investment firms was talking to me, and he said that his thesis is financials are going to win and boring companies with huge headcounts are going to win because they're going to look to automate their 5 most repeatable processes, and they're going to get rid of a lot of people through reduction in force.
No, I don't disagree with that. I think, but the problem is a lot of companies to date have been sitting on their laurels associated with that.
I mean, you look at JP Morgan. How many employees do you think JP Morgan has?
325,000.
318,000. You knew that, huh?
We talked about it, I think, a couple days ago.
Okay. So, I don't know. Can they get down to 250,000 people? Maybe. I mean,
yes and no. I mean, you personally like going into the bank, though, don't you?
Yeah, but I mean, I have reasons I go into the bank. Bank of America's got 213,000. Tell me they can't cut and make things repeatable? I don't know. I think it's a theme that can work.
No, I don't disagree. I think there's a lot of people that have been able to take advantage of high margins for so long.
So I do think that can be a theme in 26 that works. I do think that some of these companies are going to be able to get more efficient, and I think it's going to be a common theme going forward that we see margins expand and we see EPS expand. And that's why I don't think the market's expensive.
No, I don't think the market's terribly expensive here either. The companies that I did have a problem with, going back 6 months to a year ago, were the Microsofts of the world, were the Amazons of the world, the Googles of the world, maybe not the Googles of the world back 6 months to a year ago, but the Apples of the world trading north of 30 times price to earnings. I think at one point Microsoft was trading north of 35 times price to earnings. So, and I know price to earnings isn't everything, but you know, a lot of companies were steering in that sort of direction. So while we've seen an increase, now things are starting to show up a little bit. What I haven't seen though, Steve, is the expansion of multiples on those types of companies you're referring to, like the JP Morgans, the consumer processed goods companies. So
Yeah, I get that. I mean, there's one chart I am looking for. Just give me a sec. So here we go. This doesn't look scary to me. Now, people want to talk about the market's high, sell the market, blah, 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 but this is why bears be bears. Are you telling me that the market should trade, not you, but just in general, where it did in 94 at a PE of 21.1? Think about how much more profitability the market is generating now. How many more companies are in the market generating a billion of profit, 10 billion of profit, 50 billion of profit. You never had companies generating $50 billion of profit in the 90s. So when I see the market trading at 29 times, I don't think that that's crazy. I really don't.
I don't think it's cray, Steve.
I don't. I think the market's going to be fine.
Are you do you live right next to the airport, Steve?
No matter where you are, if you're in Brooklyn or Queens, you hear planes.
Heard it here first. I hear more today than most times.
I do have the window open.
Oh, is it hot and spicy in there, Steve?
Well, I like it. I like being a tad cold.
Steve said, I'm wearing a sweatshirt, so we got to open up that. Is that a full zip or is that a quarter zip or what?
I'm not being fancy today, Matt. It's a full zip.
Steve, you're rich.
I'm not feeling fancy.
Steve, I don't got that full zip money.
So I asked Claude, what was the amount of net income generated by all of the S&P 500 companies for 2024 and then 2025, and what's the differential? Now, I don't know if Claude is correct or not because I obviously am not adding up every company, but this is what Claude said. In 24, they generated 1.85 to 1.9 trillion. 2025, 2.1 to 2.15. So they are getting bigger. And the year-over-year EPS growth is expanding. So I kind of like where the market is right now. We're going to assume this is correct because I'm not doing the math.
Not enough, Steve.
You want to move into the small account portfolio challenge, Matt? Or do you not want to?
No, yeah, I'm more than happy to. I agree with you. I don't think the market is super expensive here. Very curious to see how margins continue into the first quarter, second quarter, third quarter this year for a lot of these companies we discussed. Apple needs to step their game up, in my opinion.
Apple needs to step their damn game up. I'm with you. All right, Matt, why don't you take us through what you did? Is your sheet updated?
I'm like 90% certain it's updated. I've been waiting for a man like Steve to come into my life. Actually, Steve, it's not. I have one more position I need to add.
Okay.
I got aggressive, Steve.
Yeah.
Did not pay out this week, but is yours updated? You want to start?
I can. So I made a mistake,
You always do.
and it cost me some money.
Oh, Steven.
And this is why nobody should mess with options unless one, you don't care about the money, or two, you actually have the time to follow everything. Because somebody put the shares of BMNR on me well before, and working during the day, I wasn't paying attention. And they got put on me a full day and a half before the contracts were executed. So I was figuring I was going to go in on Friday, roll them, let some time expire, blah, blah, blah. Yeah. That, and I do not log into my accounts every day, and I probably should have. So I got 200 shares of BMNR put on me. And I am now down. I'm no longer up. I am now down 9.74% out of the 10 grand because I have generated $602 from option income and a whole whopping $3.07 of dividend income, which offset a little bit of the shares that got put on me. I am down $973.79, which I am very confident I will get back in the next month of selling now covered calls on BMNR and more cash secured puts. And I do have $2,591 left in cash that I can put to work. So it is only month 2 of this. And while this is 100% my fault for not paying attention, I'm actually not mad at myself, because you know what? The price that these shares got put on me is lower than my average price per share. So it actually allowed me to average down. As not an excuse. I'm not fudging the numbers. I 100% screwed up by not paying attention. And this account challenge, I'm now down 9.74%. But I will get that. I will get that back within a month, I believe.
Steven, I'm sorry to hear.
Yeah, it is what it is. It is what it is.
I'm almost done.
And I don't mind having more BM&R shares because I actually want more, because I believe in Ethereum. So it is what it is.
So there's
Maybe
that.
I make a little play on Zeta. Maybe I buy some naked calls going into earnings on Tuesday. We'll see.
Steve, I also got assigned some shares.
Were they? Oh shit! Erwin's here.
But he's always here. It's the myth and legend.
If it makes you feel better, I got 3,800 shares of Rocket Lab called away on Friday at 69.53.
Rocket Lab?
I mean, where is Rocket Money right now? Or
Giggle
KO?
Squad. It's the Giggle Squad over there, Steven.
Yeah, my neighbors are freaking cracking up. I don't know why. They're laughing at me.
They're laughing. They say, what's wrong with this guy?
They're laughing at me.
No dividends. So let's see. I can release this. This was assigned.
You know, Matt, you didn't do your homework.
I thought I did, Steve. That's my fault.
Matt thought he did his homework, everyone. He did not do his homework. He did not do his homework.
So that means that's released. This now turns into just PLTU shares, of which is this. Well, I had it all set up, and then long options value minus 4,000. What do you mean?
So I'm going to answer a question while Matt is doing his homework. I'm fine with Tom Lee buying Beast Enterprises for BM&R Holdings, because I think Beast Enterprise is going to end up worth a lot more money in the future, and that's $200 million that we have on the books in shares. I'm fine with it. And BM&R is an Ethereum company because it holds almost 4% of all the Ethereum out there. Question is Ethereum actually going to do what we think it's going to do? Which I do not have an answer for.
What does this mean? Options purchase. What do you mean? Oh, I didn't erase this yet. No, it's Palantir Tech. That's right.
Well, Erwin, long story short, I have the 90 cash restriction in my IRA, so I wasn't able to roll unless I did a time and date I didn't want. I don't understand. Why couldn't you? What do you mean you had a 90 cash restriction? I have rolled several times in my IRA. Maybe I'm just not following.
I was 65.
Freddie, I own both BM&R and Ethereum. BM&R was more, I didn't know what was going to do better, that or Ethereum, so I wanted both. And I'm able to write options against my BM&R. Obviously, neither one has worked out, but I'm not investing for tomorrow. I'm investing for years and years in the future, so I'm fine. Yeah, Erwin, why do you have a 90-day cash restriction? Or you can just text me if you don't want to put it in the chat.
He's a good role model, Steve.
Fancy.
Did that fix it?
I kind of want pizza, Matt.
I think I screwed it up. Yes, I did. Well, no. Long story short, I'm up. I'm just trying to figure out.
Oh, okay. I get it, Erwin. Now I get it. Gotcha.
So, Steve, I'm up, but I'm trying to figure out why. Long options value. This is equity. So why is this wrong? My equity position is worth that. Purchases from options. C41 plus C46. C41 is the totals from his. C46. I don't know, Steve. I think I screwed something up in the spreadsheet. I'd have to go through it again. Remaining cash from options. Yeah, I screwed it up because now it says I'm down $4,000, which is not true. Okay. Well, I'll just share and then I'll try to figure it out. I think this is about right, but I'll go through what I did. So let me. It's my fault, people. Make sure I'm not sharing audio. There's nothing, no audio to share. I'm ready when you are, Steve. There we go. So the moves that happened this past week, I was assigned PLTU, which is a cash secured put at $42 is what my strike was. So I basically wrote that for $179. So the break even on that is about $40. If I were to try to be kind of peculiar about what the break even on this was. Those were assigned to me, so now I have 100 shares worth of PLT. Sorry, U. which is only about 39. So technically I'm underwater a good bit, but keep in mind I got 170 something in premium. So it would still be negative, but overall not horrible. What do I do with these? I don't know. Probably write some covered calls on this with the anticipation of a rebound here. So I'd have to double check what the appropriate um, price would be to write covered calls on PLTU. So there's that piece. I also bought a Palantir long call at the 175 strike for March 20th. Now, I don't anticipate, obviously, it's going to get to 175 by March 20th. But what I anticipated was when I bought this on the 18th was I was anticipating we would have a reversal in Palantir. And with that, you're kind of on this edge case of um, the contracts are pretty cheap. I think they're like 77 cents. Now they're worth about half that. But since you're so far out, any large movements in any direction will have a massive impact on the movement of this. So I bought basically 3 contracts for $230, a bit above 70 cents a piece, in the anticipation that I'd be able to sell them for $400, $500 in a couple days time, couple weeks time if it moves in the right direction. So there's that piece. So we'll see how that does if Palantir decides to rebound next week. I did some rolling, I believe. No, this is from last week as well. So this kind of remains. So nothing changing associated with these, I don't believe. March 20th and the 27th. Yep. Okay. So those remain the same. So this number is wrong here, the 7,000. So I'm still up about 10% overall. I have to figure out why these values are showing up different because I don't have options purchased at this point. It's equities. So I got to just double check in the back end if I have things going to the wrong cells. And while I'm streaming in front of 100 people, I can't think appropriately about it. So what I think I might have to do is something like this and do some other finagling behind the scenes. This is pretty much how the account looks. If I'm correct, I think I have about $2,000 in cash still remaining. So I have the PLTU shares was about $4,200. The serve cash secured put, which is $2,400. I have 2 contracts of that at $12. I have the SoFi at 23, so that's 1 contract. So that makes sense that these are about the same size. And then I have cash, which is about 2,000, so slightly less than that. And then the Palantir call is very small. So the hope is that it goes from about a 1% position to 2, 3, 4, 5% position. Double that money, which would obviously have an impact on this direct bottom line here. But that's pretty much it. The biggest piece of the portfolio right now is the PLTU shares, to which I'll probably on Monday, because I just got to sign these yesterday or this morning rather. I'll look for what the appropriate covered call for these is. Do I do them at the money? Do I try to wheel it? That I'm kind of, I don't know. I mean, I bought it because I thought that Palantir was going to have a rebound and I'd be able to buy it back very quickly. So that's why I did the PLTU shares. But let me see. So I am technically down week over week. So I'll just do that calculation very quickly. So I ended up at 11,018, to which that is a negative. So that is what? 239. Whoops. I'm not good with math. 11,239 minus the 10818. Whoops, did I do that wrong? That's the closing value. Yeah. So yeah, that is right.
So where are you? Up or down right now?
Overall?
Yeah.
I'm way up, Steve. I'm not like you.
Oh.
Not like you, Steve.
Okay.
It's just I'm making this bridge plot, so that's why.
Blader Dookie. Leslie, I did not start a position in SFM.
Why not, Steve?
I don't know.
You don't think it's the future of grocery?
I don't know. I want to be in the grocery store business.
There you go. See, I'm down a little bit because I got put those shares and they're down. So this is down 5%, but that 5% is partly offset by this 179. So where else did I lose money? Lost money. Oh, and I also bought this in cash. And I'm down $220 on this as well. So that's where my loss is. That makes sense. The 200 some offset by the 170 something in premiums minus the 200 some from being down in equity value on my long call on Palantir. Makes sense.
You're a good role model, Matt.
Yeah, I got to figure out why this big red candle comes in here. I think it's because I got assigned, but I think I'm double tagging things.
Well, I got an important piece of news for you, Matt.
What's that?
I'm gonna have to go to the store. You want to know why?
Need more milk?
New Oreos came out.
No, they didn't.
Stuff of Doom.
They didn't come out, did they?
Yes, they did. I must try them.
You'll have to let me know. Maybe instead of dinner, that's what I have.
I mean, I went on the website to make sure that wasn't BS. It's true.
People are just like,
it is true.
chemicals. So true.
So right on the homepage of Oreo is this. Amazing.
I like it, Steve. You have to let me know.
And I did not know this is a thing.
Keep me away.
I mean,
they're doing the Oreos. Have you seen the opposite? The Oreos, sorry, the Reese's that have Oreos?
Yes, I have seen those.
Yeah, those were good. My mom's boy toy works for Mondelez Distribution.
I love how you say it like that.
What, her boy toy?
Yes.
He's a good guy. I like him. Great guy. I probably should just like put out that he works for Mondelez Distribution, but so he gets some of the stuff early. So every time I go visit my mom, he'll give me the new stuff.
Good role model.
I wish Steve was my boy toy. Playing hard to get. Steve, serious question. When are you going to show us your portfolio too?
What do you mean?
Oh, never mind. You showed everybody when I was updating mine.
Yeah, I showed everybody. What are you talking about?
So if I don't get the Dr. Doom Oreos for dinner, what am I getting?
I mean, I
did have the bagels.
Dr. Doom Oreos for dinner. Maybe we go like pizza or something.
Well, I mean, I had a bagel for breakfast. I don't normally eat breakfast, but I decided to start up early. Steve called me this morning. Steve, were you impressed by what I'm working on?
I'm impressed by this. I did not know that.
I didn't know that either.
Did not know that.
Huh?
I am impressed on what you're working on, Matt. I am.
What do you hope that I'm kidding? Kidding on what? Oh, Oreos for dinner. I only eat once. Normally, I only eat one meal a day. So lately, I'm trying to cut the cows. So, but I did have a bagel, so I got to keep track of how much calories I've already had. So normally I don't eat Oreos for dinner. Normally
But
I try
in this case,
but in this case, sometimes
Sometimes you gotta get her done.
But a nice steak sounds good.
Nice steak does sound good.
You know what? I did find a good burger spot that does a good bunless. They just send the patties over, and they do a pretty good job. They lettuce wrap, but not too crazy. Sometimes lettuce wrap can just be too much, and then it just gets gross and greasy. Some good picanha does sound good. So,
Good role model. Well, it's 4:20. What do you want to do, Matt? I think you want to call it. Come back tonight for the 9 or 9:30 stream.
I might not be on for that, Steve, but we'll see.
Oh, Maddie, why not?
I don't know.
Right.
And for anybody that's trying to like fat shame you right now, go back and look at some of the preview streams. I'm on a good path, so you can say whatever the fuck you want.
What? What happened?
People are like, you already had your meal. You already had your bagel. Your bagel's your meal for the day. It's like, well, I'm trying to eat 2,000 to 2,200 calories a day, so I'm not gonna not have another meal. The bagel was like, I don't know, 600, 700 calories. So they don't know shit. They're just chat warriors. They can say whatever the fuck they want. Say it to my fucking face.
Yeah, that wouldn't be good. People end up disappearing.
Oh, Steve, you said that.
Okay. You know what, Erwin?
What's that?
This isn't fair.
What about Brother Erwin? Is that what you said?
Yeah, he just freaking sent me one of the most beautiful pictures I've ever seen. And I'm freaking starving.
Is it just him in the mirror? Oh, okay. That does look good.
It looks freaking phenomenal.
I was hoping it was just a picture of him in the mirror. He's one of the best looking men I've ever seen. Steve, you know me. I joke around a lot. I don't go both ways, but if Erwin offered himself to me, I might take him up on it. Like, well, I don't know. Can it get much better? I don't know.
I mean,
but I will say
that's a good looking steak, Erwin.
The steak looks much better. What is it? Let me see. Is that ribeye? Let me see. That's now that I got the awkwardness out into the open. Now I'm kind of curious what steak it was.
It looks really good. I gotta figure out what I'm gonna do. All right, everyone. We're gonna get going.
Oh, it's the picanha. That's it. No Rocket Lab talk. We literally have an entire stream weekly dedicated to Rocket Lab.
Matt's got Rocket Lab at 5:00. We're gonna let him go early. And I will be back tonight at either 9 or 9:30. I'm going to get some stuff prepared for the show, see if anybody wants to join me or not. Hopefully, if we don't talk to you, stay in tomorrow. Relax. The Northeast is getting hit with a freaking nor'easter.
Steve, will you be live tomorrow?
I will be. If I have internet, I will be live tomorrow. I'll be writing articles for Seeking Alpha tomorrow. I'll be getting after it.
That makes one of us. I don't know. I mean, I might be live, but I don't know about the Seeking Alpha part.
I'm disappointed.
Everyone is, Steve. Even the editors at Seeking Alpha.
I'm disappointed. You said you were going to do 2.
I'm disappointed in myself, Steve.
You told me you were going to do 2 articles.
Steve, I'm doing better. Can you at least give me some credit? I'm doing better than I was 6 months ago. Not in terms of writing articles, but I'm at least taking my health more serious. I'm reading more. I'm having more cigars that are delicious.
Yeah, you're not even done with the Gold Coast yet.
I'm streaming more.
You are streaming.
I'm not as efficient as you. Sometimes I'll just be like,
I'm not efficient.
You're very efficient.
I'm really not. I don't know why people think I'm efficient. I've been slacking. I only wrote 1 article today. I was planning on doing a second one before the damn stream.
Well, see, people are at the pool in Arizona, Steve. Could be you. But yeah, so people
Good.
are interested. Rocket Lab weekly stream will be in 35 minutes on my channel. Feel free to check in then. I'm sure we'll talk all about what everyone's been talking about with Rocket Lab for the past week. I did it alone last week, so it seems like we'll have more than just me this week. I think we'll have at least Vince. Dave, I think, was a potential last second candidate.
Matt, I will be sending you money from Dookie Pie.
Those are some expensive Oreos, Dookie Pie.
Well, you know what? Dookie Pie takes care of people.
Although, is that how much Oreos cost these days? I have no idea.
I couldn't tell. I doubt it.
I haven't bought Oreos in a while. Much appreciated, Dookie Pie.
Dookie Pie is a legend.
Not as much as you, Steve.
No, Dookie Pie is a legend.
They have Selena Gomez Oreos? Dude, we are behind.
They do have Selena Gomez Oreos.
I mean, I'm a fan of Selena Gomez, but what flavor are they? Are they like caramel?
It's like a raspberry something, I think.
Okay, I'm just a racist, I guess.
What do you mean?
I mean, Carol, because she's Latina. I don't know. I just assumed maybe it was brown. I don't know.
No, the package is red, so I'm assuming it's like raspberry or something.
Okay, I like all color, shapes, and sizes, guys. I don't discriminate. So, yes, Vince created the Rocket Lab weekly stream.
All right, we're gonna let Matt go. I'm gonna go get some pizza or something. I'll be back in a couple hours to entertain everybody tonight. Maybe watch some of the fights.
In the meantime, between now and then, I'm gonna finish Billions, Steve. I'm almost done.
You're almost done with Billions?
Almost within the last couple episodes. How many episodes I got? And then I got to figure out what. Steve, I got to keep listening to you, man. Although you never recommended Billions to me, I watched Billions on my own.
What are you talking about? I made you get back into it.
You made me get back into it, yes, but you never introduced it. Oh shit! This last season's pretty long. Okay, so I have a lot to do. But tonight I'm finishing Billions. I don't know actually if I can. They're an hour long each. But then what am I doing after? Anyway, we'll talk about it later. Dookie Pie, you're the myth, the legend.
I don't think Dookie Pie wants us to end. Thank you, Dookie Pie, so much.
We can pull the Amit. All right. And it's like he's got another 25 minutes before. And then everyone's like, call Donald Trump. Like, it's like, dude, like, what? Steve's live. Yeah. All right. Well, if anybody's interested
to see what's on industry, what industry is going to do tomorrow.
I need to catch up. There's so many things I need to catch up on. There's industry. There's the Lord of the Rings show. I don't know. Call Matt Money. But if anybody's interested in Rocket Lab, Steve, I'll put my my YouTube in the description for you. Not description.
That'll be live in 32 minutes for Rocket Money Weekly.
Rocket Money Weekly. Steve, what price would you potentially start buying Rocket Money?
$3.99.
$3.99?
Yeah.
If you are interested in Rocket Lab, we'll be live in 30 minutes.
I will say, all this AI stuff that I have been seeing is incredible. I think Hollywood's going to have a big problem. And let's end on this. When I see some of this stuff that they're making with these new AI models, I am wondering, is Warner Brothers even worth the valuation it's getting right now? Are these media assets worth it if you can just program your own stuff?
I don't know. I think what you'll end up seeing, Steve, is a rebellion. So, like, not a rebellion, but an admiration, because everyone knows that people are imperfect. So there might be a cool thing where I like F1. So let's take F1 for example. If you start having autonomous F1 cars that drive themselves, right? There's still a competition per se, but
I agree with you. I think sports is going to be different.
Yeah.
I'm just talking about straight Hollywood, not sports.
I think that there's still going to be, I mean, there still has, unless they're able to perfect voices and things like that. Yeah, Hollywood might be different. Art, I'm trying to get into art as well. Actually pay like local artists and stuff. From what I'm understanding, and whether or not this persists, the institutional sort of art collectors are very much into knowing that it's real, knowing that, and whether or not that's short lived, and eventually people just give up and just go all into AI or what. But um, I don't know. I still think that there's a long time before full on actors are completely removed.
Did you see what McConaughey said?
No.
May change your minds.
Steve's been waiting.
I sent it to Amit, so I'll send it to myself and bring it up on the screen. Oh, it's on X. Hold on. Mario Norfos had it. Give me a sec. I have it. God, this guy posts a lot.
Who, Amit?
No, Mario Narfall. I should really bookmark this. Here we
Matt,
go.
look at Alpha Investments 90s dedication video drawn by an artist. AI artist? I don't know. An artist? You can contact the artist. Okay. Alpha Investments. Wait, is that Alpha Investments the same guy? Hold on.
Matt, look at this.
I don't have sound.
No, read this.
Copyright your likeness and voice. There's too much money to be made on AI to stop it. Why pay 20 million when you can get AI generate them for 20,000? Same face, same voice. Huh. Yeah, trademark art. Yeah.
I'm telling you, I think that in the next year or so, we're going to have the ability to prompt our own stuff, and I think we're going to pay a monthly fee for it. I really do. And I'm seeing some of these things that they're making over the past day or two, and it's truly incredible.
Steve, do you know a video this guy's talking about with Rudy?
What video with Rudy?
So we said, look at Alpha Investments 90s dedication video drawn by an artist.
I have no idea now.
$1994. Okay. 1994. Okay, tribute to Lost. Okay. I can contact the artist. Okay. I appreciate that. Yeah, I see it. I didn't watch this. This just came out like a month or two ago. All right, Steve, you're the man. Steven?
Yes.
You're the man.
You're a good role model. All right. We're going to get going. I need lunch. Matt's got to get ready for Rocket Lab Weekly. Thank you, everybody, for being here. We truly appreciate it.
Yes,
I will see everyone later. Dookie Pie, once again, you're a legend. Thank you very much. Everyone, thank you for being here. Chels, Ray, Michelle, especially Matt, Melanie, Rambler,
Hot Irwin,
June,
J-Bug, Venom,
Spencer. Just trying
Rambler.
to screw up my algorithm. Didn't work though.
Mama Tess, Miss Melanie, the myth, the legend herself. Yeah, we already said Miss Michelle. A lot of great people.
A lot of great people, a lot of good role models.
We got 2 a.m. here. 2 a.m. is the myth, the legend. Cool.
All right.
All right, Steve. I will at least stop by. I don't know if I'll stay for long, but I'll at least stop by.
Sounds good.
All right, my man.
Later, everyone.
Steve's been waiting for a stream like this.